A todo esto vamos a analizar las perspectivas de inversión. Lo hacemos con Brian Reilly, responsable de estrategia en Mediolanum International Funds. Good afternoon, Brian. How are you?
Good afternoon, and thanks for having me.
Well, first of all, a brief assessment of this shock caused by DeepSeek in the markets. Has it changed your perspective on the technology sector, for example?
Yeah, look, I think it's really interesting, and as you rightly say, it was unexpected. I mean, the key development was that, the Chinese have managed to develop, an AI technology both cheaper and with equivalent processing power as their US counterparts. And that's really put a shot across the bow of the technology sector and AI chip makers like NVIDIA, and we obviously saw large falls in the market yesterday. I think if we take a step back, however, the bigger picture remains the same. AI is a secular force. In time, it should live to quite a sizable uplift in productivity, not just in the US, but globally. So I think when the market takes time to digest this news out yesterday, the fact that, it has been proven that we can do it both cheaper with equivalent processing power, I think all in all that augurs well for not just the general equity market, but also the technology sector as a whole.
And what are your global growth prospects for 2025? Do you think Trump's trade belligerence can affect the inflation or trade?
Yeah, great question, and that's what everybody's grappling with at the moment. If I start with the economy, I would say we're seeing quite positive momentum as we start the new year. We are seeing an uplift in both consumer and business confidence out of the US on the back of Trump's victory. What we know from Trump on the campaign trail and from his first term in office, his policies will be to lower taxes and to support businesses. And both of those things are good for growth in the world's largest economy, which tends to spill out into the rest of the world. It's a different picture in Europe. I mean, European economic growth has been very sluggish really since the pandemic. We're seeing particular, stagnation in the likes of the major economies of France and Germany. I would say, however, we are seeing better economic prospects in the periphery. Italy, Ireland, and even Spain has been held aloft as a standout in terms of its economic performance. But we do think certainly policymakers need to do more in terms of rate cuts in Europe to help support the economy. In China, it's still too early to tell whether the supports put in by the government in the third quarter of last year will do enough to push the Chinese economy out of its slump following its property crash. As we know, in Spain and Ireland as well, property price bubbles, when they deflate, tend to take a long time to recover. So it'd be too early to say that China has turned the corner. But when we put all that together, on the whole, we see a very similar growth outlook to that we witnessed last year. And we expect global growth to be somewhere in the region of around 3% over the course of 2025.
And Brian, what do you think about this Fed meeting? Will it remain interest rates unchanged? Will we only see only a cut in 2025? What do you think?
Yeah, again, a lot of debate, particularly among fixed income practitioners, about whether the Fed should cut rates, how much they should cut, or whether they should cut them all. Even to some extremes, people are calling for the Fed to raise interest rates. Now, we don't think that will happen. We think over the course of the year, we will see the Fed moderate their interest rate policy, but only by about 2 rate cuts. If you remember 12 months ago, the market was pricing in up to 6 cuts by the Federal Reserve. But we just think the growth momentum is too strong. We think Trump's policies will propel that growth even stronger. And Fed members are likely to be quite nervous about the inflationary impact of any tariffs or Trump's immigration policy that could stoke the dying embers of inflation again. In Europe, it's a very different picture. I would say inflation is firmly under control outside of some exogenous shock like a spike in oil prices. So the ECB face a very different dilemma. given the sluggish growth, we think the ECB will have to do more. And at the meeting this week, we think it's almost guaranteed that they will cut interest rates by 25 basis points. And our expectations are is that they'll do another 3 to 4 over the course of this year, bringing that ECB base rate back down to 2%, which will be supportive of the Eurozone economy.
And finally, Brian, what is your investment strategy this year? Where do you focus? What sectors and what regions?
Yeah, I mean, on two different elements of the main asset class. I mean, for equities, it's a challenging outlook. As I've said, the economic backdrop is pretty strong, but we've just come off the back of 2 really strong years of equity market gains, led by the US and US technology in particular. The Magnificent Seven really have done a lot of heavy lifting for not just the US but global equity markets. So as we come into this year, our belief is that valuations are relatively elevated. To your question earlier on the news out of China, in terms of its AI technology, you know, one of the reasons we saw such a large sell-off in Nvidia yesterday was because valuations are kind of priced for perfection here. Now, while that may be a negative in the short term for AI and technology stocks, I do think it opens up opportunities for other parts of the market to catch up, which I do think would be healthy. Also, I think it could be good for Europe, and we are beginning to see some interest from US investors in particular into less expensive European equity assets. I think for bond investors, it's a pretty open and shut case. You can still generate above inflation yields from, you know, virtually risk-free government bonds at this stage. And also our expectations for rate cuts in Europe, particularly from the ECB, we think you can get some price appreciation in the bond outlook as well. So we think the outlook for equities is mixed based on the performance of the last 2 years, but we think there are very good opportunities still existing for bond investors.
Okay, Brian Reilly, responsable de estrategia en Mediolanum International Funds, Head of Strategy, Mediolanum International Funds. See you. Thank you so much.
Thank you.